Hi viewers, good day to all. This is my YouTube channel SAS Accountancy, which is guiding the students studying accountancy in plus 1, plus 2 and also UG courses at college, that is BCom, BBA, BCA students. Viewers, share, comment, like and subscribe my channel. Thank you.
Hi viewers, good day to all. In this video, let's say about the golden rules of accounting. So these golden rules of accounting is the basic rules which is helpful to preparing journal entry. While preparing journal entry, we must follow these basic rules. So these rules is classified into two. First one is personal account, second one is impersonal account. The second impersonal account is further classified into two. That is first one real account and second one nominal account. So we see one by one. First one, personal account. So personal account means in the transaction when the person involved into the transaction, business transaction. So that is personal account. So that person may be real person or artificial person. So real person means it is the proprietor of the business or creditors or debtors. They are called as a real persons. Artificial persons means that is it is created artificially by law. Example, a company, a partnership firm, and then a bank, educational institutions, etc. These are called as a artificial persons. So in the transaction, when the persons involved into it, we should follow the personal account. See the example, debit the receiver and credit the giver. Journal entry always have two aspects, that is debit and credit. Every transaction we should write debit and credit. So see the example, cash received from Shakti rupees 25,000. This is one of the business transaction. So in this transaction there is two aspects. One is cash and another one is Shakti. Okay. So Shakti is a person. Cash is a real. So that means real means asset. So according to this basic rules of accounting, we should have debit the cash account, debtor. According next we see the real account. Debit what comes in. So what is comes inside the business, that should be
Debited. Next, in the next line, we should have write the credit. Shakti is the giver. He gave the cash to the company. So Shakti is the giver. That should be credited. 25,000 rupees amount have to be write in the credit amount column. Next we should have write the narration. Cash received from Shakti.
at the time of purchase of goods from the supplier, the goods comes inside the business. Same as from the customer, we already sold the goods. If any defective of the goods, the customer will return the goods to the company back. So that is sales return. Okay, these two are the according to the real account. It is comes as income into the business, so it should be debited. As same as when the goods going outside of the business, that is for selling purpose, so it is sales. And then when the defective goods return to the supplier, we already purchased from the supplier, that is returned to them for the purpose of the defective of goods, so that is purchase return. In two conditions, the goods are returned to the suppliers or selling to the customers. Okay. In this case, we should credit the goods, that is while selling the goods and while return the goods to the seller. Okay, according to the real account, credit what goes out. It is going outside of the business, so it is sales and purchase return are credited. See the example, another example. Furniture purchased for rupees 12,000. So that is, furniture is one of the assets, that is real account. So it is comes into the business. So purchased means it is not a goods. Only at the time of goods purchased for the purpose of selling, that time we have to write purchase account debtor. But in this condition, we should have write furniture, particular asset should be debited. Rupees 12,000, the debit amount mentioned in the debit amount column. And the furniture purchased for the cash. So it is rupees 12,000 rupees cash. It should be credited to cash. So these two are the real. Furniture is one of the real asset. It is come inside the business. Debit what comes in. Cash is also a real. So it is going out of the business. So it is
according to credit what goes out. So cash is credited. Narration, furniture purchased for cash. Next, nominal account. In the nominal account, debit all expenses and losses, credit all incomes and gains of the business. See the example. The salary given to employees rupees 50,000. Salary is one of the expenses. So according to the rules, debit the expenses, particular expenses should be debited. So salary is debited here, rupees 50,000. So cash is going out of the company as salary. Cash given to the employees as salary. So cash is real account. According to the rules, credit what goes out. So that is cash going out, that is credited here. Narration is being salary given. Okay, got it? Thank you. Viewers, share, comment, like and subscribe my channel. Thank you.